All right, here we go. Tuesday, May the 20th. Got about one more week left, a little bit more than a week left in May. And looks like it's starting to roll over a bit. Although, as you'll see, not much happened today. There was a very, very tight range for the market for pretty much everything, very tight range. So sometimes that happens just before a downtrend or a change of character, let's call it. But we'll see what happens here. But gold is rallying back again. I'm going to look at gold today, and looks like it continuing the rally, might be going back to all-time highs once again. It is acting very bullish, and I'll show you what I mean in a minute. I said last week that gold probably would rally back. I wasn't sure that it would get back to the highs, so we'll see if it can do that or not. But the chart is very interesting, so we'll look at that in a minute. As always, I am not a financial advisor, so everything I say here is for educational purposes only, and past performance does not guarantee future results. So let's take a look at where we are. First, I'm going to go to the home page and look at the bias, market bias. You can see it ticked up slightly today. As I was putting it together, nothing really was changing. Almost every single thing that I had in this stayed exactly the same, except for a couple. So that's what I want to show you here. We go to the market bias page for subscribers. You can see there's one right here, Biotech. Biotech got a short-term up signal. That's this one right here. So it's starting to perk up. And interestingly, let's extend this downtrend line right here. And you can see that it's just below, basically just touched it. So it looks like it's ready to continue higher. That is a character change right here. I've talked about this many times. It's a higher low. So now we need to see if it will put in a higher high, something above this 84 level. So lots of stocks in the biotech area might be good candidates here soon. Um, Interestingly, I actually I did one on the options strategy that I'm going to lay out for everyone. I probably am going to do it in a Zoom call that I'm going to do for subscribers this weekend. So for those that are subscribers to the website, I will put it out there probably tomorrow morning with the link and everything. It'll be on the website, and you'll be able to just go to it. It'll be Saturday, probably 1 o'clock Eastern time in the afternoon. So anyone that is interested in joining, you can join, and it'll be an interactive session. You can ask any questions you want. I'll show anything new that I've added to the website and talk about a few. Probably we'll talk about the option strategy first. That'll probably be take up the initial part of the call, and then we'll just open it up to anything else. So biotech was an interesting one, but if we look further down under metals, silver and silver miners, they actually are moving ahead of gold. And I'm going to look at gold as well, but let's take a look at silver first. And you can see that it just gave a short-term up signal, and it's got a big candle and closed the day at the high on better volume than recently. It's basically average volume, but it's better than it has been recently. So, and this also has a character change in the chart. It's has a higher low as well. So we want to see if that can put in a higher high. So silver and silver miners, both of those got short-term up signals today. Silver miners looks almost identical to silver. So let's take a look at gold and see what that looks like, because it probably will give a signal later this week. There's gold. You can see it's come down, pulled back right here, almost to the 50-day, and then took off. Pulled back right here to the 21-day and took off. Right now, 3 days ago, it pulled back to the 50, and now it is taking off again. So the important thing about this at this point is the trend line. So for those that like to use trend lines, we can draw one. I like to use the close. So there's a trend line basically right about there. Close right there, basically a double top, essentially. So that's what it needs to get through. that level right there. I'm just going to leave that on there and we can look at it again later. But look at this uptrend line from all the way back here at the end of 24, beginning of 25. That's when gold really started to take off, broke through the resistance line, which is right about here, and then continued up. And it's had a few pullbacks, but that actually is very healthy. So it's got lots of gaps, huge gaps higher. So this is probably foreign countries buying gold when you see gaps like this. And it's continuing to gap higher. It had another gap 2 days ago, and today continued to go higher. So we'll keep an eye on that, see how it does. But gold certainly is rallying. We'll see what happens when it gets back up to that double top and see if it can break through it, or will it create a triple top. One other thing that I like to look at is the 10-year yield right here. And that actually is pulling back. It has a shooting star candle, so that is a reversal. So it might be heading lower right now. While we're on the topic of gold, there's a chart that I have on the website for subscribers. If you go to the charts page, and in the blue column, second column over, down here under other relative charts, there's a 34-year gold versus the S&P with the dollar chart. So it's not so much that gold goes higher, but does it outperform? So if the S&P performs even better, if they both go higher and the S&P outperforms gold, then you really want to be in the S&P, even if gold is going up. So this is the 34-year chart going back to 1990. And what you'll see that down at the bottom is the dollar, and up at the top is gold versus the S&P. And what that means is when it is falling, the S&P is outperforming. When it is rising, then gold is outperforming. It had been falling, but that trend line looks like it has now been broken, so that gold now is beginning to outperform the S&P. So all through this period, even back here to 2021, when gold first started to climb a little higher, everyone was saying that gold is a great place to be, but the S&P actually in this case, gold was outperforming it slightly right here, but it was underperforming through this period. But right now it is clearly outperforming. Now, the thing that is a little concerning is that I put on this chart the secular bull and bear markets. And what you'll notice down here is during a secular bear market, that's when gold outperforms the S&P. The S&P typically goes down or just goes sideways for 12 years. In this case, gold outperformed. Right now, during a secular bull market, you can see the last one back here, gold underperforms the S&P. And gold had been underperforming just up until roughly 22 and 23. And then this year, it's really just taken off. So does that tell us that we might be coming to the end of the secular bull? We could be. We'll have to watch it. You can see that the higher lows down here back in 2000, 2001. And right now we've got some higher lows as well. Remember, this is a relative chart, S&P versus gold. So if it's rising, then gold is outperforming the S&P. So that might be an early clue that this secular bull might be getting a little long in the tooth. One way you can always check it out is on the homepage of the website. About halfway down, there is a secular bull and bear chart. So on this, you can actually see the secular bull will continue until one of these indicators goes below the appropriate line. So you can see up here on the RSI, the relative strength, it's this blue line right here, which is at the 40 level. As long as usually when charts stay above the 40 line, then they are still bullish. And you can see it came back down to it a few times. That's COVID right there. There's the 2022 bear market. This one back here is 2011 right here, but never went below it. And it started coming down again just recently, but look what's happened. This is a monthly chart. So it takes a full month for this to complete. We haven't finished May quite yet, although we're getting close, but May looks like it's going to have a little tick upwards. Same thing with the MACD, the momentum indicator over here. It needs to get, the line itself needs to get below zero. And it's not even getting close to that right now. So again, it's starting to tick higher. And then finally, this one down here, the 200-week moving average, which is the red line right here. Remember, this is a monthly chart. Needs to close, the price needs to close, price for the month needs to close below that red line. And we came close to it with this recent sell-off, but look what that looks like right now. It is a green bar at the top of the green bar. So it's now continuing to move away from that red line. COVID actually went below it, but never closed below it. So, and this one right here is 2015, 2016 period, right in through here. So in all these cases, and you can look at the previous one that started basically in end of 1982 and started moving higher. This is the 87 crash. Even with the 87 crash, it never breached any of these levels. So the secular bull stayed in place. In 1990, we had a recession right here. Same thing, the secular bull stayed in place. And then this one right here was 94, 95, where we had a sideways pattern for nearly a year, but never broke any of these levels. Not until 2000, 2001 actually, did it finally break through each of these three levels, and it did so at almost the same time. So that was proof, even though it had been coming down for a full year before that. That indicated that the secular bull was over, and it would then started a 12-year secular bear market, which broke out officially in 2013. Even though the bottom was in 2009, the official breakout was 2013. So we are still very far away from this secular bull ending, but it is a little concerning of what gold is doing. I think there's some geopolitical reasons that gold is outperforming, but gold right now actually looks pretty good. We'll see what happens when it gets back up to that double top. See if it can break through it. All right, let's go back here and take a look at the indexes real quick. The S&P. Again, as I mentioned, all of the chart, just about every chart I looked at, is essentially did nothing today. So you can see it over here, but right here it's a spinning top doji basically. So it went down, it went up, and it ended just about where it started. So indecision, and that's at a top. So when things like that happen at a top, many times we'll get a pullback. Now we got one right back here. We had almost the exact same look right back here, and we had a pullback, but only for 3 days before it took off again. So we'll see if that happens again. One difference between this one is where the momentum indicators were. So the RSI was not yet at 70. In this particular case, the RSI hit 70 and starting to roll over. So that is oversold. And that's what the market looks like right now. Definitely oversold. Now, one person asked, if there's a pullback in the summer, where would I expect that pullback to get to? Well, the first level I think it likely will get to is the 200-day moving average, which is right about here at about 57.50, which is 200 points down from where we are now. So June and July, we could have a pullback down here to the 200-day. And then the next level is here at this support level. There's also, which is roughly about where the gap support is right about there as well. So that's at about 56.50. So that's another 100 points, so 300 points total. I don't think it's going to go below that. I think once we get through the summertime, I think we're going to be going back to all-time highs again. But we'll see. We'll see what happens in the summer. All right, now let's take a look at the NASDAQ 100. Should look fairly similar. And yes, you can see it right there. Let me actually put the Zoom thumbnail on it too. You can see right there, basically didn't really do much of anything today. So just hanging out, going sideways. Bitcoin, kind of the same thing, but Bitcoin in this case, let me put the zoom on that one. Bitcoin had a little bit more action today and actually went up, had a nice solid white candle. Even though it went up and down both directions, it ended at 106, or right now I should say is at 106,422. So it's just above that 106 level that I talked about yesterday. Needs to stay there. Actually, would be nice for it to go a little higher and close, have the whole candle above 106. But it is definitely making a run and trying to get through that 106 level. There's a lot of resistance because lots of people back here that got burned every time it hit that want to break even. So you may have lots of sellers from this period back here that want to get out. All right. Now let me take a look at one stock that someone asked me about, which is Google. And before I look at Google, I want to take a look, go to this new Dow theory and look at one in particular, which is communication services and the internet group, which is the group that Google is in. In fact, Google usually leads that group. And what I talked about with these two, and the reason I put them on the website, is that way back here in February, when communication services was making new highs, the internet group was not. It was actually making new lows. So that was a divergence between indexes. And what Dow theory says is that indexes should confirm each other, and they were not confirming. So if we look at the communication services group, it looks like everything else. Spinning top doji right there near the top, near the extended average true range, 3x level. But look at the internet index. It actually has been pulling back for the last week. So even as communication services went higher until today, the internet group actually has been pulling back the last week. So it might be giving us an early signal that it might be heading lower, which will usually be led by Google. So let's take a look at Google. Here's the Google chart. You can see it's hitting the 200-day and pulling back. Looks almost identical to that internet group. So the last 3 days, Google's been pulling back. It looks like the momentum indicators are starting to sort of run out of steam. It needs to get above this 200-day, but looks like it's hitting some serious resistance right at that level. So it's struggling, put it that way. It doesn't mean it can't get through it. It might actually do that. But you can see right here, it is definitely struggling right below that 200-day. And the RSI down here can't get through the 60 level. So this is the kind of the opposite of that 40 level. So if a stock is in a bearish configuration, you can see right here through this whole period here, it stayed below 60 the whole time, even though it went to oversold status right here, and then bounced as a result of that. It could not get through this 60 level. And that's happening again. So Google looks like it is really having a tough time. It's definitely struggling to get through that. If we look at the weekly now is right at the 50-week, which is also the 200-day moving average. So it's also hitting major resistance right here, and needs to get through that for it to make any headway. It's very low volume today on Google. So if you're in Google, I would say tighten up your stops and watch to see what happens, especially if we here in the next week or so, as we finish out May, then head into June, the market might get much weaker. We'll take a look at where we are. There's where we are right now. This is for tomorrow. That's Wednesday. So we've got 1, 2, 3, 4, 5, 6, 7 days left. Got a holiday on Monday, Memorial Day. So right now we're right in the middle, and this one down here is pretty much what looks like what we're doing. We're just basically doing nothing, just going sideways. So after Memorial Day, we might get a little bit of a rally before we go into June. Probably on Memorial Day, I'll have the information from Stock Traders Almanac about June, and I'll create one like this for June with all of the key dates on it as well. June 6th, I know, is the jobs report. And then how are we doing versus 2018? Well, you can see 2018 rolled over right there, and look what we're doing. right now. We are rolling over. Now, the difference is the time frame. So in 2018, this was in February, and then it took off. Right now, we are in May, and we're heading into the very weak summer months. So we may get a consolidation sort of like this, but without this uptrend right here. So up until, in this particular case, it was about a month and a half. So that would put us basically into July. Speaking of which, one of the subscribers asked me to look at seasonality for July. So let's take a look at that. First, I'll look at the seasonality chart for the S&P. And the reason they asked for that is because they read an article that said the end of June to the middle of July is usually a bullish period. And I will tell you, in my experience, having watched this for years and years, I do notice that the week right around the 4th of July, the few days leading up to it, and the few days right after it is usually very bullish. The market actually has a nice little rally right in there. But right after that, usually the second week after the 4th of July holiday, then everything kind of falls apart for the summertime. So we may have a sideways action in June and then get a rally in the beginning of the end of June into the first 2 weeks of July. I'm going to look at that in a minute. But let's take a look. Let's go back 12 years. This is just the S&P. The reason I do 12 years is because it takes us to 2014 and move it back 1 year. So it takes us to 2013, which was the beginning of this secular bull market. So what you can see is July, sure enough, is one of the best months of the year. And May is a pretty good month as well. But look at June. So be careful in June. This is, sell in May, go away. Be careful in June. July, we may absolutely have that rally. Probably the last week or so of June, right into the middle of July. And then August and September. September is the worst month for the past 12 years. And I'm not sure how far I can go back with this, but 20 years. So if we go back 20 years, July and April are the two best months, and November is the second best. And you can see June is weak, and then August, September, October. Those three, that's usually the weakest period. September in particular is typically the worst month. So this takes us back to 2005, by the way. If I go back to, let's see what 2009 would look like. So there's 2009. That's actually the beginning of the overall trend. That was the bottom, essentially. So in this case, you can clearly see that July is the best month, up 3.1%, going back to the beginning of this long rally. Even though the official breakout was 2013, the market has been in an uptrend since 2009. So in this case, July absolutely is the best month, with November being the next one after it. June is weak, and then August, September, the weakest months, and then into October. But up 3.1% in July. So let's take a look at this a little bit differently. And if you bear with me for a second, this actually will be a good lesson too. I'm going to use this chart right here. And I am going to take a look at, I'm actually going to put some dates in. So stock charts allows you to put in a start date and an end date. So let's go to 2024 and we'll look at June 1st until July 31st. So there's what it looks like. Let's go a little further out. Let's go to October 31st. All right, so here's August, September. Actually, I'm going to do this a little bit differently. I'm going to go back to May because we are in May right now. go back to May 1st, and then we'll make it to August 31st. There we go. All right, so here's July. Here's middle of June right here. So yes, you can see from the middle of June until the middle of July, almost exactly July 15th. That is a bullish period. Let's do the same thing for 23. Go from May 1st, 23 to August 31st, 23. And here's June. So here is basically the third week of June right here, all the way basically to the end of July. Very bullish for 23. Let's look at 22. Let's look at 22, May 1st to August 31st. All right, in this case, we've got June right here. So weakness, in this case, May was weak as well. Weak right into the third week of June. And then the market started moving higher. Now, in this case, it peaked over here in August. So it continued right into August. But it's still that period to the middle of July basically went sideways right here. But it was higher than it started. So I would say jury's out for that period, but the rest of the time it was pretty bullish. Let's go back one more, 21. Let's see what 21 looks like. Here's 2021. 22, remember, was a cyclical bear market. So here's 21. Here's the third week of June right here. There's the bottom, third week. And right in the middle of July, almost exactly July 15th, right there. So third week of June into July 15th. Definitely a bullish period. Let's this is kind of fun. Let's go back to 2020, COVID year, and see what that one looks like. So here's 2020, same period. Here's June 22nd, in this case, June 29th. So it took it right to the very end of June. And then right from there, middle of July, it hit the peak, July 22nd, something like that. I can tell you exactly. Right there was, yeah, July 22nd was the peak. So yes, that period did the same. Now continue going higher in the COVID year. Let's see what happened in 2019. I think you're starting to get the idea that that person or that article that that person read might actually be accurate. And it's something that I've noticed too. Right around 4th of July holiday, the market usually is bullish. Now, in this case, it started right in the beginning of June and right through, it peaked right here on July 26th. So a little bit after the middle of July, there was a peak and then pull back and then up again. So if you use this one here, it's actually July 15th, exactly. So once again, yes, that period looks like it is definitely very bullish. 2018, May 1st to 2018, August 31st. Here's the end of June, in this case, June 28th. And right over here, peak was July 25th. So, and it continued to go higher after that as well in 2018. So the conclusion I would make is absolutely that looks like a very bullish period from about the third week. And now there's no telling what's going to happen. It could be different this year. Certainly, the market can do anything it wants, and you don't know exactly when it's going to start. But just looking at these charts, we'll keep this in mind. We'll actually look at this once we get to the middle of June. We'll take a look and see what the charts look like, and see whether if we can identify or peg when that uptrend would begin. All right, that was a very interesting comment, and thanks for making that. Whoever it was, I don't remember who the subscriber was, but please continue to make comments, give me questions, tell me if there's something you'd like me to look at. That was a really good exercise. Now, for the daily scan, which I'm going to do, I watched a video today from Stock Charts. For those that are members, you probably got the email as well, from Tony Zhang, who is the creator of options. Let's see. What's it called? I think it's at the top of the, um, it's at the very top up here. Options play. Options play is a really, really impressive. I mean, he took us through it today on the video, and they're sending out a recording, and I'll share that with everyone probably in the newsletter this weekend because I don't think you need a subscription to at least watch it. And for those that like options, you probably are going to be very impressed. Now, a couple of things that struck me. Number one, he's using stock charts to do it all. So you need a subscription to stock charts plus a subscription to Options Play. Options Play is $40 a month. A lot of the things that he showed are things that not everything, and the way it's put together is much easier and much more impressive. But a lot of the things are similar to what I've been putting together for options as well. And that kind of gave me confirmation that what I was doing was heading in the right direction. I probably will sign up for Options Play at $40 a month, but some of the things that I'm putting together for options for only $99 a year, it's not going to be the best like what this is, but it certainly will give you a leg up. And if you're just trying to understand options and just learn them, then there's a great way to do that using my website. And I'm going to talk about this on the Zoom call that I do this weekend. So on the website, on the options page, there's lots of educational information here about moneyness, about which is bullish or bearish, time decay, really, really important concept. All of these things are on here. There's a vertical spread worksheet that will teach you, how to do vertical spreads correctly, and a really good book right here. I'm going to probably add the book that I'm reading right now over here to the left. So lots of really good things about options right here. And the reason I mention this is because one of the searches that Tony has on his option play site, he's got a number of searches using the scans in stock charts to automate the process of identifying candidates. And it's very similar to what I do here in the daily scan. And one thing that encouraged me is that my scan that I created, optionable bull, so these are all weekly options. There are some other criteria that help to look for stocks that are trending higher. So it's not just every weekly option. There's some additional criteria that looks for the best of the best, basically. He said he likes to use Investors Business Daily, and Investors Business Daily is the top 50 IBD stocks are one of the components of my top 10 list. But in this particular case, there's actually about 68, I think, stocks in this list. But the interesting thing is, and here's the scan that I just ran. The scan that he showed, the number one stock that came up, interestingly, on his scan was gold. And that's the number one on my scan as well. So if you look at gold right now, and the reason that I thought that was interesting is because my criteria looks like it mirrors. He probably is doing it a little bit differently, and he might have different criteria in his scan, but I think it's ending up producing the same kind of information. So my criteria, of course, is that it is accelerating, coming up from underneath and crossing the 21, which is the reversion to the mean. You can actually see it here in the Keltner channels. Reversion to the mean is right in the middle. So when something starts to move higher, and gold was, he used that as an example in his video, and it's number one on today's daily scan, interestingly. The other ones are Humana, and you can see right there, Humana just starting to move up, and the momentum in the squeeze chart is moving higher. So this looks like a good one for a bullish play. Johnson & Johnson, both of these, by the way, this was in pharmaceuticals. Humana is in healthcare providers. So they're both in the healthcare sector, which is I showed you Biotech earlier, which is helping to move the healthcare sector higher. So both of these are in healthcare. And then Starbucks, which is one that I experimented today with as well. You can see that it actually went above the 21 right here. So it first would have hit the scan right there. And then it went up, pulled back a little bit, and then bounced on the 21, starting to move higher. And look at the squeeze that it has right now. So Starbucks is the fourth one. So interestingly, these are very similar to the ones that he showed, which implies to me that the scans that I put together look like they're pretty good ones. Let me also look at, I did one for Magnificent Seven just to see. I just like to run this to see if there's anything, and there's nothing on there right now. I do a bull and a bear version of it, and nothing on there either. So Magnificent Seven are pretty much just staying, moving higher, just staying pretty much where they were. And then this one here, it says this is the one that incorporates the top 10 list and some other lists as well. And in this one, there actually are 14 stocks. Here's another healthcare. So right at the 21, starting to move higher. But look at all the gold stocks. There's a gold stock right there. Looks very similar to gold itself. DRD, Eldorado Gold, right there, exploding higher. Harmony Gold, looks the same, exploding higher. Kinross Gold, same thing. All of these charts look almost identical. And then Wheaton Precious Metals is a metal mining stock. It's doing the same thing. So this is a really good scan that really helps to identify stocks and areas and groups that are starting to move up. And in this case, you can see J&J is on the list as well. But in this case, there's lots of gold miners on here. So I suspect gold and gold miners are both going to get short-term up signals on the market bias chart in the next day or two. So gold is definitely heading back. All right, I think that's it for today. Covered everything I wanted. That summertime exercise was really interesting. Looks like we'll keep watching this around the middle of June to see if it's starting to move higher and we get that rally again into the middle of July. That would be nice. All right, thanks for watching, everyone. Please give me some comments if you like it, like and subscribe if you haven't already. And I will talk to you again tomorrow. Thanks.